Hello, it is the 18th of June 2012, and let's take a look at gold as well as the 10-year Greece bond yield. Start off with gold, and I'm liking this setup actually, which had a lot of tests within the 1623 level as a significant Fibonacci two-thirds retracement. And then when it broke down, it established what I call a double bottom formation, which is a situation where you pretty much make two reverse V's or reverse U's, where you go down to some level, this was some level, and then you make it up close to its previous breakdown point, which is the case, and then you go back down to point B, and then you break the resistance, which of course is right in there. And it still hasn't done too much, because if we take a look at the price objective for it, if we match the pattern, then I can just make a little box in here and put it to the breakout point, which is close enough to state that the 1685 would be significant level of a price target resistance. But it first found resistance at the area where support had originally been found, and it had a higher low back up to this level, and today's candle is that of a hammer formation where it's closing, or at least as of now, as of 1:16 p.m. Eastern Time, to its area where it previously closed before, after having this retracement. So I think breaking by this little significant level, I like the odds that it will make it up towards this level. Quite frankly, that's one way of playing on the breakout. What some people would prefer to do is have this thing break out somewhere up to around here, and then pull back to 1623, and then as it's pulling back, put your stop somewhere below this line, and you got a good risk versus reward for a situation like this. But overall, it's gonna take a significant price move well above 1700, or move down to like 1400 before I'm gonna like the buy signal overall for the price of gold on the more longer term time frame. Now let's look at Greece now, and on the quarterly time frame, again, this is, I've talked about this before, so I don't want to talk too much in depth about this, but you have one trend line that has changed its rate of ascent, and right now something in this area in here is the current trend. Now if you look at this now on the shorter term time frame on the daily chart, and this would be a line chart, and all these photos are available in the more information box down below. There was a silver video earlier today, so there's 3 charts that I have placed within the silver video for today's date, as well as these 3. There will be 6 for today, and the link is going to be the same every single day as long as the Dropbox works. But anyway, back onto this chart. Interest rates were close to 44% up here, and then they spiked down to about 17 3/4, got above the significant Fibonacci line, and then found resistance at this one, and now it's coming back. It got down today to about 25 3/4, and 25 and a dime is significant Fibonacci level. The old play by the book is you wait for it to hit this level, and then you go long with a play back up to this level, if not even higher, or just adjust your stops, however you want to do it. But a lot of times this could be a good entry point, because there's a good chance that it bounces at this level at 25.10. Maybe the 25.74-ish or 25.75 hit today will be that level as it appears above, but very difficult to state. And if you are looking for the order, maybe you put an order in that you want to go long at 25.10. Well, that didn't get executed today, and it's all a casino game anyway, as the whole point of showing this is that these rates are extremely out of hand, and it's going to be interesting to see what happens on a clear break above 31, how it reacts. Thank you for tuning in, and have yourself a great week.